Good afternoon, Maverick traders. Joe with you here on a Monday. It's the 7th of November. Let's get into a market roundup. I've got my 2 cents on the markets. I've got some opinion. Take it for what you will. Let's get into this market analysis. Now, what I saw today was pretty much a carryover from Friday. Wednesday, we had a Fed announcement. The Fed comes out, raises 0.75% as expected. And Powell gets up on the podium and says, hey, you know what? I'm still not happy with where we're at, so I'm going to stay hawkish. And the market's rolled over. We were higher a little bit, but continued lower. Then we gapped down on Thursday. And from then, we've had a little bit of a relief rally, and it's not showing any signs of anything super bullish. However, we are seeing three very different types of patterns in the markets. We're going to take a look at the SPY and the Qs compared to the diamonds, which is just kind of up there. Real quick, let's get a breakdown of what we did today. About 1%. Dow up 1.31. NASDAQ and the S&P up about 1%. And the Russell up about 0.5%. Oil down another 0.75. And gold is just not moving anywhere. You guys pull up a chart in gold. It has been range bound for weeks. It's really just kind of parked. Actually, it's kind of acting like I am. I'm not sure where we're going to go here, up and down. We're in a very sticky situation with the spiders. The Qs is telling us we should be bearish, and the diamond says we should be buying. Well, I'm probably not going to do much but sit on my hands, at least for the first part of this week. And why is that? Well, we got the midterm elections. Pretty sure that's going to have an impact on the markets. And then the CPI number on Thursday to see if that agrees with what Powell's stance is. And I imagine if that comes in hotter, a little hotter than expected, then we could see a market turn south. Take a look at the advanced decline line. 58% advancing, 37% declining. That's just today's action. So it is a nice little continuation, little bounce from, or follow through, I should say, from Friday's action. Above, below the 50-day moving average, 48%, above 52% below. So still leaning towards the bearish side, but only slight. The majority of that is definitely going to be in the tech sector. So let's take a look at the SPY here. And what we have is a very interesting little move over the last few days. It is basically a bear rally. Now, this looked pretty ominous on Wednesday and especially into Friday, or excuse me, Thursday. And this could have easily worked its way back down to this 360 mark, this 360 level. It didn't. It gapped down and it's closed this gap. Now, where it's very, very interesting and convenient is where it stopped since then. It's just sitting right on that 50-day moving average after bouncing off of that rising 20-day. So overall, we're still playing with this mess that we set up here in June and mid-June and the end of July. So we're right back to these levels. But one thing that's interesting, you could see that these moving averages actually have caught up. So is this indeed that wave theory, right? We got the ABC correction. And if that's indeed going to hold, this should or would just roll right over. Problem is, I don't think it's going to without a little bit of motivation in sentiment. And that we could see that. We could see that with the midterm results. We could also see that with the CPI number. But the SPY is telling us right now we can go anywhere. And Rob made great mention of this, saying it's in no man's land. It is in no man's land when we took a look at this on the weekend update. So let's take a look at the Qs, because the Qs is telling me I should be short or at least looking to get into something bearish. Big difference. Here's the June lows, and we are below that. We're still below that. We're below the moving averages. A nice breakdown on Wednesday and into Thursday, where it actually revisited support that it set the mid part of October there. So this is just a very anemic move from on Thursday, and even today. It's still below its 20-day, both moving averages. It is just bearish. This is a -3 on my top out, my top down approach. The SPY is basically 0. And then the diamonds, let me pull up the diamonds on top of this real quick, because the diamonds is just broken out of everything. Has actually had a pullback, setting a higher low, and looks to turn to move higher. So we've got 3 different looks on these markets. So let's get into our heat map. Everybody kind of participated a little bit outside of Tesla, outside of some utilities you see down there on the bottom. Just an oversold or continuation of a move to the upside, a bounce, if you will, from Friday. Now, what does that give me? Nothing. I've got absolutely nothing to go off of. I've got my weekly outlook is 0, my monthly outlook is 0. I've got the SPY, which is where I gauge all the markets for me, I usually go off of the SPY. It's in the middle of the no man's land. I'm above the 20. I'm right at the 50. It looks like we closed slightly above it. The slopes are off. One's down, one's up. I'm below a resistance level that it was set previously, but I'm above support. This could be a pretty decent setup for a higher low if we get a good surge to the upside, good reports, maybe a good CPI showing that it's coming down, inflation's coming down. But without that sentiment change, I don't know if if the SPY here can actually get above these resistance levels. So I'm stuck. I'm at a loss. I'm going to sit here at least for the first part of the week and see what happens. So that being said, I wanted to share some trades with you. A couple of the ones that have been on our watch list, a couple of the trades that we've made or some of our traders have, specifically CRWD and Palo Alto Networks, PANW, Ring is another one. I've only got a couple. I'm not showing you the others, but they've broken down and really done well. So great work, guys, out there on identifying those bearish trades. STNG and General Mills on the bull side still hanging on. Let's jump right into it. So here is STNG. What I liked about this is it's just holding on and basing. It's nothing that's really racing to take off and exceed and break new highs, but this thing does stage when it breaks, when it does move higher. So I'm trying to see if I've got another example of it, but once it gets to areas, it will stage. Here's one back in this area, back in June. Once it broke out, it just reset a level. There you go. Let me just draw these channels here. And so this likes to break out, and stage. So we could play something above the 50 here, between the 50, 52 for the next little while. Or if you want to, if it's going to move higher, you could wait for that to break above the 52 and find another stage maybe between 52 and 56 or 55, something like that. So looking pretty good. If you want to look at a bull, that's a pretty decent chart. General Mills, this has been on our watch list for a while, and I do like it again here. It looks like it's trying to do a pullback. This last attempt that it had, I believe we were looking at this as this broke out, and it just kind of failed down with the markets, but never really collapsed. So it stayed in a channel. What I like here is here's that other break above this high. Now it's slightly above, but we do have a pretty good little pullback here. And these last three candles haven't really done much. They haven't really broke down, but they really haven't gained anything, kind of like the markets. And when this sell-off occurred, this last current sell-off, you could see the volume has dropped pretty decent. So if it can hold its own at about the 79 level and turn higher, I'm cool playing this as a bull pullback, maybe targeting it back up to 82 or even a little bit higher if you want to do that as well. So I like those on the bull side. On the bear side, once again, I've got the CRWD, I've got Palo Alto Networks and stuff. I like those. They're a little extended. They did really, really well for our traders that have been in them over the last week or so. But I wanted to get you ones that you guys could look at now. I like this stock right here or Wayfair, I should say. The reason why I like it is this bullet or bearish engulfing candle. So we got a bearish engulfing candle pattern right here, and this engulfing actually went between the 50 and the 20-day moving average in one day, and that's today. So I imagine there's some sort of news associated with this or something in its sector. That was yesterday. Today it had a little bit of a doji, so it's a little hesitant to bleed lower. But keep an eye on this, folks. If this starts to encroach on this $30 level, this might be something cool to jump into on the bear side. So I like Wayfair on the bear side. I like Ring. Ring has been on and off our watch list for a while. You have to zoom into this one quite a bit because Ring has come down substantially over the last year. But once you get down here, it's a pretty nice chart. So we had a pretty good support level at 40 that it actually broke, and it's consolidated and struggling to retest that 40 or the 50-day even, and it's just sticking more towards the 20-day around here at 35. The last few days have just been gorgeous. It broke this support level on Friday, Friday, and here we are on Monday just taking a little bit of a break. It doesn't mean that it's going to continue lower. This could try to come back and consolidate through the rest of the week, right? Because we've got midterms tomorrow, and there's going to be a lot of talk on that, and people are going to be polling and seeing who's ahead, and I think that's going to take the majority of the focus, maybe away from the markets. We could see some volatility, so keep that in mind. And then, but Thursday, I think, is going to be the big one with the CPI. And if it's scary, if it shows that we're not out of the woods yet, this could roll over here at the $30 level and continue down. So keep that keep that on your watch list. And that goes for not only just this stock, but anything on the bear side. So you want to maybe just make sure that, hey, if these markets really give up, you probably want to look over to your bears and jump into some of those. But here's ARK. ARK is just a whole lot of those stocks that have not been doing very well, and they continue to not do so, and it's at another pretty substantial support level. We're approaching it. I like the moving averages. They're in the correct area. This is below the lows of June and July, and it looks like it wants to bleed further. And it could. It really could. It is holding a lot of those higher flyer stocks, and it's been out of favor, and if that continues out, I imagine they're going to continue to be abandoned. All right, there's, once again, opinion, but it's a good chart. So what do I got for the little summary here? Not a lot. Midterm elections will have an impact on the markets moving forward. I think it will drive it. Sorry, I kind of had a run-on sentence there for this, but definitely three different patterns in the markets here. We'll wait for more clarity before making trades. I have a lot of traders say, well, why don't you go short the Qs, long the diamonds, and sideways the SPY? And I said, that's great if you find the exact trades that will do that. When the markets bounce, the bounce will occur in the Qs, and when they correct, it's going to fall in the diamonds. So it sounds easier than it is, and when I get markets this separate, I usually find that it's usually repositioning, trying to get out of the Qs, put it into something safer, into the diamonds, and coin flip through the SPY. If you can't make heads or tails of it, just wait, because when all three go the same direction, it becomes much easier to trade in that direction, and you have a lot more to choose from. You can err to the wrong sector, or maybe you want to go short, but you don't go short the weakest sector. It's not going to kill you when it gets to some big bounce. So just wait for clarity if you're unsure. You got time. There's no reason to put good money out there if you're not sure about it. CPI on Thursday. The Fed is still hawkish. We'll see if that is going to confirm this hawkishness. And we got earnings. Activision, Take-Two Interactive actually was out. They beat their numbers, but they projected much lower revenue next quarter. I saw them down about 13%. And then Mosaic is also this afternoon, and I haven't seen their numbers yet. But those are the three that I saw that were pretty big. There's more out there if you guys want to keep an eye out for them, because it's funny. We're still in earnings season. It's kind of sneaky. All right, guys. Thanks for joining me. We'll talk to you next time. Bye, everyone.